Hello everybody, I'm going to do a quick housing market recap for Colorado Springs as of mid-December. We're almost at the end of the year. We are almost into 2023. So what has happened with real estate for Colorado Springs so far, and how is our city doing? So we're looking right now at the average and median sale prices in Colorado Springs for just general property. This is single family houses, condos, and townhomes. So as a general for Colorado Springs, this is what we're looking at. So currently we are at an average sale price of $471,893, and we are at a median sale price of $420,000. We had a high in April at $529,000 for an average and $472,000 for the median, roughly. And after that, we started to go down in the home prices. So we're almost halfway into December, and the average and median sale prices for December are going to have less accuracy. Once we finish out the month, those will be the final actual numbers. But what we have so far does seem to follow the trend of downward prices. So that's continuing. You can see here that seasonally, and this happens every year, we just have a higher number of listings in the summer than we do in the wintertime. And we're following that same trend. This year we have, you can see we have a little bit fewer sales now than we have had for previous years. If you look at the historic sales, we've gone up quite a bit. We haven't had this level of inventory that we have now. We haven't had that since 2016 and before. So the inventory has shot up, but the home prices are the most expensive they've ever been, and interest rates are more than double what they were last year. They are starting to come down, but we're looking at how the median income for Colorado Springs versus the median home price in Colorado Springs. The house is 5.9 times more expensive than your median income. And if you compare that to 1980, it was only twice that. The house only cost twice your median income. So it is understandably and obviously way more expensive to buy a house now than it ever has been. And so that does affect who can actually afford to buy. Even with interest rates not being in the double digits, again, home prices are far more expensive versus your income. The house your parents and grandparents could afford is not, it's obviously and explicitly harder to purchase and attain today. So that is a sad reality, but there are still buyers in the market now who need to buy something. What the rates are doing and how home prices are doing does not affect the people that do need to buy and sell, and they will still transact. But obviously this makes buying a really harder sell just for a lot of buyers, and that has shifted a lot of power in the market to buyers and investors. I don't know if I would say this is a buyer's market at this point, but right now buyers can negotiate with sellers. They can get price reductions. They can get concessions toward rate buy downs. They can address more inspection items and get more things fixed by the seller potentially. So the trick right now is to figure out if you're getting a good deal, even if you buy a home under the listing price, which most buyers are, when they make offers, they're offering under the listing price because they know they can. But are home prices going to come back up, or are they going to continue going down? So for a lot of buyers, it's just a waiting game right now. They are not sure what is going to happen with the housing market, and nobody knows what's going to happen with the housing market. My guess is that as we approach spring and summer, home prices will continue to go back up. We might see some stagnation or maybe a little bit more of a price reduction overall from now until spring. But I think the prices will come back up because the demand is there. So Yeah, timing the market's not something that I recommend. It's impossible to accomplish. So, again, people are going to buy and sell property when they have to, and they're not going to do it because they can time the market. Most people cannot afford to do that. They buy and sell when they need to. In other news, mortgage rates are coming back down, surprisingly. So I'm looking at the mortgage rates here that one of my lender independent brokers sent to me. So if we compare the VA, there's the VA and the conventional. We'll just take a look at those two. So for a conventional 30-year, we're looking at, and I'm comparing Trailhead Mortgage to, I usually look at rates on mortgagenewsdaily.com. So you can pause these screens if you want to look at either one of these. But so we are at a conventional rate of 5.985 all the way to 6.13, somewhere in there, depending on who you go with. For VA, we're at 5.425 to 5.72%. So great that the rates have come back down. I think that's in response to inflation being recorded as less than it has been in the previous month. So we do seem to be going in the right direction as far as what the Fed is looking to see in inflation and how the economy and the market is responding to it. So we'll see where rates continue to go from here.